In this video, we'll learn about subsequent measurement of leases in the books of the lessee. So when we talk about the subsequent measurement, we have to think about two things. First is the asset which is the right of use asset which the lessee had initially recognized in his book, right? And then we have the liability, which is the lease liability. So the lessee has to account for these things. First, the right of use asset, and second is the lease liability. So for assets, first we have to decide that, the period of depreciation for the asset, because the asset will have to be depreciated. So the rule is that the period would be the earlier of, which means that the depreciation would end at the earlier of, end of useful life, or the end of lease term. For example, in our previous example, the useful life or economic life of the asset was 10 years and the lease term was 5 years. In that case, the right of use asset will have to be depreciated over the period of 5 years, right? Now, once we've decided the depreciation period, we have to actually think of whether the right of use asset has to be recorded at the cost model or the revaluation model. And both these models are actually basically the same as for property, plant, and equipment and or intangible asset, depending on which asset really is. So we have a cost model which carries the asset at cost less accumulated depreciation and impairment losses. And then we have a revaluation model. And when do we have to record an asset on revaluation model? Well, in case of property, plant, and equipment, if a class of asset has been recorded at revaluation model and this right of use asset belongs to that class of asset, then the lessee will have the option to either record it at revaluation model or at cost model, which means if the right of use asset belongs to an asset class recorded at revaluation model, then the lessee will have the option. However, if that right of use asset belongs to the IS 40 investment property, it's an IS 40 asset, and if the lessee has a policy to record all of its investment property on fair value, then the lessee will have to record that right of use asset on fair value as well. So he will not have an option in that case. So if investment property of lessee is recorded on fair value, then lessee, it's a compulsory. So basically, when an when a right of use asset has been initially recorded, the lessee has to decide at what for what amount of what is the deposition period, and it is basically the earlier of the end of the useful life or end of the lease term. And if our end of useful life is 10 years and lease term is 5 years, then depreciation, the asset would be depreciated over 5 years. uh, Now, once that has been decided, we have to decide the whether what model should we carry our right of use asset, either cost model or the revaluation model. So, what are the cases when we actually have to record an asset on the revaluation model? So, if property, plant, equipment, if that right of use asset is a property, plant, equipment, and if the lessee has the policy to record a particular class of property, plant, and equipment at fair value, and that right of use asset belongs to that class, then the lessee will have the option to either record it at revaluation model or at the cost model. Similarly, if that right of use asset belongs to the investment property, then if that lessee has a policy of recording investment property at fair value, then he will have to, at all costs, also record that right of use asset at fair value, unless it is not practical to do so. And in all the cases, it will have to be recorded at cost model, right? So, in a previous example, the liability and asset both were $379, right? And how did we come up with that amount? We come up with that amount because we had 5 installments, and all those 5 installments had been present valued to the point zero by a discount rate which was implicit interest rate implicit in the lease. And we also made a payment schedule of the payments and how the balance, the liability resulted in interest expense, and the payment of the rental reduced repaid that expense, that liability, and further reduced the principal to arrive at a new balance. And so this is a cycle which continued till the end of the life of that lease. So now it would be better to begin with the subsequent accounting of the lease liability. So in the first year, as you can see, on the start of the lease, 379 was credited as lease liability and debited as a lease asset. So let's remake that entry. So lease asset is debited by $379, and lease liability, apologies, right of use asset is a proper term, and lease liability is carried by $379. Now this lease liability would result in an interest expense. And what was the interest rate? 10%. So this was the start of year 1, which is it's year 0, which means it's the start of year 1. Now what happens at the end of year 1? First of all, we know that we will make a payment of $100 at the end of the year 1, right? So we can think of it as either payment through bank. So if we have made that $100 payment at the end of the first year, we also know that we have incurred interest expense on this amount. And what was the amount of interest expense? It was 10% of the lease liability. So the 10% of 379 would be 37.9. So interest expense would be recorded in our books, which would eventually be reflected in a profit and loss account. By 37.9. So if we paid $100 and we had to pay $37.9 on account of interest expense, then what is the remaining amount? The remaining amount would actually be a reduction from this lease liability, right? So we can debit the lease liability by the remaining amount, which is $62.1, right? And we can repeat the same in year 2 and all of the years in which we would be carrying this lease asset. So at the end of the year 2, we also make the same payment, which is by bank or cash, whatever the mode is, $100. And now this time the interest expense will not be recorded on the basis of $379. Why? Because we have already reduced this liability at the start of this year or at the end of the previous year. So for this year, the interest would be charged at this amount less this amount, and this is the amount which has been represented in our payment schedule. The initial balance was $379, but because we had paid $100, so the principal had been repaid by $62.1. So the remaining amount would be $316.9. So the balance, the liability, the amount that we owe to the lessor at the end of the first year was $316.9. So because at the end of the year, at the end of the first year, the balance was $316.9, because in the account of the liability, 379 was credited and 62.1 was debited. So the net balance at the end of the year 1 was $316.9. So interest expense would be $316.9 multiplied by 10%, because this was our interest rate implicit in the lease. So this makes it 31.7. And the repayment of lease liability would be the remaining amount from the $100 we paid, and it would debit or reduce the liability because we have paid that amount. So it is $68.3. And that's what we can continue throughout till the end of this lease period. And in addition to these entries, for each year you will also have to make an entry for the depreciation expense. So if we are dividing the entire asset for 5 years, because that is the shorter of the useful life or the lease term, then we would also have to make another entry, and that would be, we have to debit the depreciation expense by what amount? 379 over 5. And it is $75.8. So depreciation expense would have been to be debited by $75.8, and accumulated depreciation will have to be credited by $75.8. The same would be paid in all of those years because the depreciation would remain the same. So this is how we account for the lease asset as well as the lease liability subsequently after initial recognition.